Imagine a world where the most forgotten tool in crypto could predict the next $1 trillion market shift or warn you about a soul-crushing crash before it hits. Stablecoins, those simple digital dollars you use to store value, are now at the center of the biggest wealth transfer in human history. Transaction volumes are in the trillions on-chain every single day. We're at the point now where even Visa has this tracker set up. And if you're not paying attention, you're missing big opportunities because these quiet giants are actually changing the entire crypto world. Today, we're diving deep into why stablecoins are absolutely critical for every trader and investor. We'll uncover the hidden patterns most people ignore, and we'll turn what seems basic into your secret advantage for finding opportunities and avoiding risks. In this video, I'll reveal the major updates shaking the stablecoin world, from global competition to massive institutional money that could change everything about liquidity and give you early warnings for market turns. We'll break down 3 powerful metrics that form an unbeatable combination, each packed with insights to help you time cycles, detect money flows, and measure real adoption before prices move. And by the end, you'll see how putting these together creates a clear path to smarter decisions with signals that could protect you from hidden dangers. If that sounds like what you need in this fast-moving market, hit that like button and let's get started. Before we dive in, remember this video is for educational purposes only and is not financial advice. Crypto is risky, so always do your own research. With that said, let's explore why stablecoins deserve a lot more attention than they get. Most of us see stablecoins as a safe place to park money. You convert regular money to USDT or USDC, wait out market dips, and swap back when you're ready. But that's just the very basics of it. Stablecoins are actually the fuel powering the entire crypto machine. They represent fresh money entering the space and are the entry point for big institutions, whale investors, and everyday users. This year, with the market reaching new peaks, stablecoin supply has grown to almost $300 billion. And it isn't just sitting there doing nothing. It's a clue that money is waiting to flow into Bitcoin, Ethereum, and your favorite altcoins. But why does this matter? Well, stablecoins show the market's true heartbeat. They connect traditional banking with crypto. Without them, you literally wouldn't be able to do anything in crypto. And ignoring them means missing early signs of bull runs or crashes. For anyone trading or holding long term, they're essential because they reveal how actual adoption is trending. With new regulations making them more secure, stablecoins are even now attracting big players, turning them into a source for trillions of dollars of capital for the crypto market. The real value is in the insights and the knowledge that lets you get ahead of everyone else. If you want to catch these signals in real time, I share regular updates with the community inside of the FireHustle VIP Discord. The link is down below. And that's where key metrics become powerful. Let me share the 3 most powerful stablecoin metrics. These aren't random. They work together like a 3-part strategy for unlocking market insights. Together, they've been helping me time market phases, spot money movements, and measure real usage. I'll explain each one clearly, then show you the advantage it'll give you. First is the stablecoin supply ratio, or SSR. This compares Bitcoin's total value to the total supply of stablecoins. Think of it like a scale that shows if Bitcoin is cheap or expensive compared to available stablecoin money. The chart at the top is the price of Bitcoin, and the chart at the bottom is the SSR. Right now, the SSR sits in undervalued areas, which means that Bitcoin looks cheap compared to the stablecoin money available. So what does that mean for you? Well, it's really good at predicting cycle tops and bottoms. A low SSR, like now, points to undervalued Bitcoin and historically means Bitcoin and altcoins go parabolic pretty soon after. You can time your entries when you see a dropping SSR along with falling Bitcoin dominance. That's your cue for a potential altcoin season. So in simple terms, a low SSR means Bitcoin is cheap compared to the cash on the sidelines. And when it comes to trading and spotting these opportunities, I don't want to be stuck waiting on paperwork. That's one reason I've been using BTCC. You can start trading right away without KYC delays. It's simple, quick to set up, and you're good to go on spot or futures instantly. They've been around for more than 14 years, so they know what they're doing. If that helps you, the link is in the description, and they'll even give you a 10% bonus on your first deposit. So check them out and let me know what you guys think. Now back to the metrics. So the SSR is just one part of the picture, but to really understand the flows, you need to look at total stablecoin supply. This tracks the combined size of all stablecoins. 1 year ago, this total was at 170 billion, which means it's up 64% since then. The advantage here is that you can read the money flows. Fast growth, like the 100 billion added this year, signals new money flooding into crypto, which usually happens before big rallies. If growth slows down, it's a warning of potential money leaving the market. In the past, I've personally looked around for a 10% monthly increase as my signal. But of course, there's a lot of factors you have to consider along with it. But the takeaway is very simple. Growing stablecoin supply usually means pumps are coming. Now, the third piece is real stablecoin transaction volume. For this one, we're going to go back to the Visa dashboard. This is a great resource because it gives you so many different views and the flexibility to filter in so many ways. I definitely recommend you play around with it yourself when you get a chance. The adjusted transaction numbers focus on real economic activity because they filtered out all of the bot trading. Last month, the transaction volume was almost $1 trillion. And if you look at the chart, you can see the big difference between this year and last year. This is the key insight. This metric shows you actual usage. It's not just hype or pure speculation like other crypto. If you see volumes spike without prices moving, it usually means whales are buying quietly. This metric confirms the current trend, helping you tell the difference between real growth and hype. Now, before we move on, I just want to remind you that these metrics are a perfect example of why you should subscribe to the channel if you haven't already. I'm breaking down the most important charts and doing all of the heavy lifting so that you don't have to. There's so many to watch, and if you put on post notifications, you'll know exactly when I drop my next video. Crypto is very, very time sensitive, so staying on top of real-time updates is important. So far, you've learned how SSR shows timing, supply shows money flow, and volume shows real adoption. Now, let's put that into today's news. Metrics are powerful, but they become even more valuable when you combine them with breaking news that's literally changing this market right before our eyes. The first major shift is that China is challenging the market with its very own yuan-backed stablecoin. Reports from Beijing talked about plans for a yuan-backed stablecoin to challenge US dollar dominance. This could totally change who controls money in crypto. I'll be keeping my eyes on the news for official launches. If tensions rise between China and the US, it might be smart to consider diversifying in non-USD stablecoins. Use this with your supply metrics. You might see the yuan stablecoin news come out and then transaction volumes spike up. If that happens, then it could be a good idea to add some of these new emerging stablecoins to your analysis. The second game changer is that US banks are now entering the space. Banks like Bank of America are getting ready to launch their own stablecoins under the new regulations. This shows that Wall Street is finally all in. This could unleash trillions in institutional money, and I'm going to be watching for volume spikes if and when any of these announcements happen. It could be a great entry signal. The third reality check is the major stablecoin transaction milestones we keep hitting. Adjusted global stablecoin transactions were almost $1 trillion last month. And if we include automated activity, then we're deep in the trillions. And forecasts are pointing even higher. These numbers prove stablecoins aren't just tools anymore, they're becoming the backbone of crypto finance. High growth projections tell me that we're in a sustained bull market. But if the growth slows down, it could signal a market top. Combine this with your 3-part strategy. If you see volume growth and the stablecoin supply also keeps going up, then that confirms real momentum. And when things slow down is when the bubble could burst. These pieces of news aren't separate events. They amplify the power of the 3-part strategy. China's stablecoins and with US bank stablecoins combined with massive transaction growth creates a perfect storm of opportunity if you know how to read the signs. Here's your simple action plan. Watch SSR for timing, track supply growth for money flows, and follow transaction volume for confirmation. When all 3 of these line up, especially with major news, then that's your strongest signal. When you see a low SSR, like now, combined with growing supply and growing transaction volume, that's when the market opportunities are about to show up. Add in major news from China or Bank of America or geopolitical competition, and you have so many confirmation signals pointing in the same direction. The beauty of this approach is how simple it really is. While everyone else chases price charts and gets caught up in daily noise, you're tracking the fundamental money flows that drive everything else. You're seeing the big picture while everyone else is looking at small pieces. Stablecoins have evolved from simple parking spots for money into the foundation of the entire crypto ecosystem. Master these 3 metrics, stay informed about major news, and you'll have a significant advantage in navigating this market. The next time you see stablecoin supply go up or transaction volumes spike, you'll know exactly what it means and how to position yourself. That's the difference between reacting to markets and anticipating them. If this strategy helped you see stablecoins in a new light, hit that subscribe button and turn on notifications so you don't miss a future video like this. And if you want to go even deeper, then definitely come and join me in the FireHustle VIP Discord for serious alpha and real-time market analysis. The link is in the description below. Remember, in crypto, information advantage is everything. Now you have the tools to read the signals that other people miss. Thanks for watching, and I'll see you in the next one.